Hi, I'm Patrick Reid from the Adamis Principles. I've got some headlines for you. We had a Fed cutting, but the dots were hawkish. There was a comment, expansion, and dollar yen liked it, stocks loved it. So the dollar didn't really do much. I mean, they were slightly hawkish on the dots, but all capping really, and there's no big takeout on the dollar. But stocks were happy, as I said, dollar mixed. At the moment, we've got a dollar and risk mixed. So it's a real nightmare to trade. No clear direction. Even yields are asking the question of their own bounce. You know, are we reversing? But we did have some big weekly reversals there. And let's briefly on rates, shaved off the probability. So something going on with the rate mob. OIS shaved off probabilities just before the Fed meeting on the 18th. Now, OIS at 50-50 for a 25-bit cut for the 31st of October. Not looking great, but so it's all to play for, 50-50, both in risk and dollars. So let's look at the first chart, Euro-dollar. I mean, look at this, very difficult to trade. We are capping at 111.10, probably nudging higher, but like I say, if we do break 111.10, 111.88 is the real level for us at the Adamis Principle. It is a very good level, but again, no clear direction. We'll probably need some new subplots to the tariff narrative, and you know, net, you know, there's not much divergence with monetary policy. So the next slide we have. So this is probably the easiest dollar to buy post-Fed, just because you had a lift in stocks, which obviously supports dollar yen in the risk sense. You had a lift in yield, so it's kind of probably the easiest dollar to buy in that sense. But still, we're still below 109.11. That's a nice level for us. Clear 50% on the fib, previous low, previous high. Failed around mid-June, as you can see. It was the top of the Bollinger Band. And, you know, that's the only place I really like getting short for myself. Obviously, there's no investment advice involved here, pure day strategy. 106.86, the place to expect some buyers, only because it's the fib on the 61.8 and it's the mid-Bollinger Band. But I think before the oil shenanigans, risk was grinding higher, both in EM and G10. So we may resume this. Next slide, please. Okay, cable, Juncker soothing comments, supportive of cable. We broke through 125.60. I think we nudged to 82 today, but it's a big level above that. 127.74. That is a marine of a level. If you go back a few years, it's been tried and tested for quite some time. I would be very wary. Cable's still a political currency. It's, you know, just be very, very careful and adjust your risk accordingly. Next slide. So this bad boy says a lot, right? It's dollar rand. It's probably the biggest risk thermometer for us. And look, it's just doesn't. I mean, I tip my hats to the dollar in EM as well. Because both, you know, dollar rand and a few others are nudging higher, but still, as you can see on the daily, still not really sure what it wants. So all of that together and with G10 just means both dollar and risk are mixed. It's for those reasons I'm staying out. If you want to know more, I'll be blogging on LinkedIn all week. My name's Patrick from the Adamis Principles. I hope these charts are helpful. Thank you.